Welcome. This is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, it's obviously been a rocky couple of days. Yesterday, the S&P 500 sold off 2%. Today, it's back up almost 2%. The good news today was the GDP number, to a lesser extent the jobless claims number. Both of them knockout numbers. Market up very big pre-open and has been able to hold and build on that today. In the VIX, we're seeing an interesting dynamic in the futures. The VIX cash is really moving back and forth the past couple days. It was up 3 yesterday. Today it's down more than 2. And it's putting a small break in the term structure that we've seen in the futures. Now, over the last several months, we've been in what's known as Cantango. VIX cash lower than the front month future, then the back month futures. That's a healthy market phenomenon. That's when things are calm, people tend to add in more volatility into further out months because of the possibility of something happening far into the future, and they're less worried about the here and now, the VIX cash, the front month, the back month. Yesterday we broke into nearly what's called backwardation, where the VIX cash is higher than the front month, lower, and then the back months are lower still. We were at a pretty flat term structure. VIX cash was up in the higher 27s, front month future about 27, back months in the 26 range. We just broke into backwardation. We've fallen back into Cantango today, so people are pricing in that this is going to be a more calm period. People are no longer as worried about the here and now, as the VIX cash about 25, front month future about 25.5, back months about 26. So it's not a very steep Cantango, it's not a very secure one, but we've returned to where the cash is lower than the back month futures. In trading yesterday, very interesting, a ton of upside call buyers, even as the cash and the futures were going towards them, making them more expensive. So the 35s, November 35s, people were paying up to 65 cents for. The 40s were trading in the 30-40 cent range. So there was really a lot of panic yesterday that we hadn't seen previous to that. The S&P had come down from 1100 to 1030, a sizable pullback, and people were really coming for that upside protection. Today, the volume is much lower and buying has been much more muted. We've seen a lot of sellers today as people are taking premium out of the front month since we've had a kind of a calming day with the GDP and jobless claims. That's what's going on here. Jamie Tyrrell, Option Monster.